Again, I think in a different context, right? And there's some very interesting studies which show that many great businesses actually get built during the time of a recession, right? And just to give you some examples, things which we use on a daily basis, right? Airbnb, Uber, right? Slack, just to name three, all happened during the 2008-9 recession, right? And if you go further back in time, back to, let's say, 1929, which was when the great US recession happened, lots of great companies got built during that time, right? So I think a slowdown in some ways is good. And as an entrepreneur who myself have weathered a couple of recessions in the past, it teaches you to, first of all, it teaches you humility. Okay, you learn to get back to the basics of why you started the business, and why whatever you are trying to build, how do you the most important thing is to survive more than anything else, right? It's almost like that old jungle saying, right? What happens in the jungles of Africa every day, right? The lion gets up thinking, today I have to hunt down a deer or some other animal to survive. And the deer or whatever other animal gets up thinking, I have to be able to outrun the fastest lion, right? So entrepreneurship is in some ways like that, right? It's all about surviving and then scaling and then growing. So I think in terms of how to manage cash, how to keep communication open with the team, with your customers, with your investors, all of that, I think a slowdown is good. I think honestly, some of the valuations in the last few months have been seriously, used to wonder what is the wisdom of somebody, why, for example, the sudden craze for 10-minute delivery, right? I was telling somebody the other day, right? There are only two reasons I can think of a 10-minute delivery getting funded. Okay, and all of you adults here, so I'm going to take the liberty of cracking a slightly, off-color joke. One is obviously when you need medicines, and the other is for an activity which you do in a bedroom, right? Otherwise, I can't think of any reason why you would want 10-minute delivery, right? So I think some of that will come down to, to ground earth. People will build solid businesses coming out of this, businesses which are focused on, scalable, profitable growth as opposed to, vanity-led growth, right? And I leave with one comment which, this is a piece of gyan which I got from a boss 35 years ago. And he sat me down one day and said, listen, I'm going to tell you something which hopefully you'll remember for the rest of your working life. And that was, revenue is vanity, profit is sanity, and cash flow is reality, right? So this is something which I think all entrepreneurs must kind of internalize. It must become part of their DNA. And hopefully, I'd love to see that everyone in this room, at this period I think will last for a while. It's not going to go away in a hurry. But hopefully all of you will, come out smiling and build, lasting and scalable businesses. Thank you.
Thank you, MS sir. Thanks a lot. So now we would like to invite our panelists for today. Rahul Jain from AWS. Rahul Jain leads the early startup ecosystem for AWS in India. The role involves managing relationships with 500 plus micro VCs, accelerators and incubators and co-working spaces. He has been in AWS for close to 4.5 years and has led developer programs for APAC and startup marketing for India previously. Rahul is a 2X founder, has founded Omnipolis and Super iLabs previously, and has worked with Wipro, Google, Signity, Fiserv, CSS Corp in tech, product and marketing roles prior to AWS. We welcome you, Rahul. Thank you. Our next panelist, Bhanu Reddy Varla, is a senior entrepreneur who successfully made an IPO with Bartronics India Limited, is now a strategic advisor and mentor at Urban Kisan. his new EdTech venture Edify Path forays into domain-specific courses for graduate engineers. He is now director and partner at Grey Logic Technologies and also an alumnus of IIT Mumbai and IMB. Welcome you, Banu. Our next panelist is Narayan, a venture partner at R Ventures. He is a serial entrepreneur with 2 exits, an active angel investor, and currently a venture partner at R Ventures. An entrepreneur with successful full track record of building teams and organizations with quality of dedication, attention to detail with strong customer focus, recognized as a strategist and tactician, a consistent record of delivering good results in organizational growth and operational performance. Thank you, Narayan. Our next panelist is Rahul, a founder and CEO of Whistle Drive and one of our startup from first cohort of Lab 32, a full stack intracity logistics company that works with some of the India's top brands like Flipkart, Zepto, Myntra, Amazon, Delivery and many others. Starting a new business vertical in an uncertainty during the pandemic to now scaling it to more than 45 cities in just 18 months is a testimony of his leadership. The best part is that they're already profitable. Welcome Rakesh. Thanks a lot, everyone. Let's start the panel discussion. It's going to be really interesting, and some of those aspects have already been shared by MSR. So I'd like to start with an open statement. A combination of macroeconomic factors, falling tech valuations, supply chain bottlenecks, higher inflation pushing interest rates upwards, rising crude oil prices, the Russia-Ukraine war, and a tech crackdown on China have reduced capital flow globally, bringing a sense of rationality to startup valuation. It seems to have spooked the global markets, and the effects are showing in the funding raised by Indian startup ecosystem as well. So as famously Sanjay Mehta, founder of Hundex VC, has mentioned, winter is here. Let's start the show. Thank you. So let's start with Rakesh. So Rakesh is one of those founders of startups who have gone through pandemic and was on verge of closure. So that is when they came back really hard. So let's listen to their story, please.
Hey everyone, nice to meet such a large crowd. The last time I spoke after 2 years was at TIE event. Some of the people are also a part of the panel. So we were not on the verge of closing because I think I had a clear plan to how to tackle pandemic. So I would be lying if I said we didn't know what to do during the pandemic, because so it essentially we were an employee transportation solutions company. We were a full stack company that offered technology solution and also fleet management for corporates. But I envisioned Whistle Drive to be an urban mobility company, and logistics was a logical addition to it. So in 2019, when we announced a $10 million fundraise, I was working on a plan to step into logistics. Nothing fancy, nothing, we didn't have a team, we were just doing some sort of market research to understand the market and stuff. But pandemic happened, and April and May were brutal. Our revenue went to zero because we were not a SaaS company, we were a services company. And then we took a call. This is a good time for us to step into logistics, is what the team felt. And we were able to scale pretty fast from there. We typically work with e-commerce and D2C brands. We cater to their mid-mile and last-mile requirements. And all the quick commerce companies like Zepto, Blinkit, Swiggy, Instamart, Dunzo, they're also our clients. They use our trucks to handle their mid-mile, goods transportation. So I just wanted to add one more point to what MSR sir has said about quick commerce. It exists because of impatient people like me. There's a lot of folks like us who do not have the patience to go to a supermarket and buy. So my cook comes in and I ask her to make pulao and some raita, and she says, dude, you don't have curd. That's when I think of, okay, Zepto. So I think the model is not profitable yet, obviously, but I hope it becomes profitable for the people like me. Otherwise we would suffer. But we work with all sorts of companies in e-commerce and D2C space. We've grown tremendously in the last 2 years. This financial financial year, we are in the trajectory of about 100 crore revenue. So, and we've been profitable for the last 1 year. So that's a bit about Whistle Dive. Thank you.
Thank you, Rakesh. Sorry, my fault. And moving on, now we'd like to invite Narayan. Please, your open statements.
Yeah, hi. Hi, everyone. I think, yeah, this winter is going to be really cool. So we should all enjoy. So having said, I always believe that it is survival of the fittest which actually matters. And entrepreneurs in particular have to go by that. Yeah, time has come. We can't really work more with the fancy valuations which come up. Somebody was the other day quoting me 400 crores for an idea. So I was stunned. So these days are going to go off now. That's for sure. So it's time to really build sustainable business models, and revenue generation and customer first approach is something which would actually transform and make you survive in this winter. Thank you.
Bhanu, I'd like to listen to your thoughts.
Hi, everybody. So for me, I don't know what is winter actually. So I need to understand what is that winter.
Just to give you a quick heads up, so winter is a reference from a series called. Okay. for those of you who do not know that, so it's a reference from a season called Game of Thrones. Yeah.
That's good. Thank you so much for the heads up actually. So for us, like, I was the old school guy. When I did my IPO in 2005, I only knew bankers actually. How bankers look like? You might have not seen them actually. When they come back, they're going to rip you apart. Okay, and they're going to do a lot of due diligence. You don't even have no clue idea at all. It's all has to be in black and white papers actually. And of course, when we went for an IPO before that, we were working with our chartered accountant. Everybody says like, last 2 years, 3 years, you should not have a bounce check actually. So I went back and checked how many bounce checks we had actually. So there's so much of work which went on for us when we initially did the work actually. And in fact, the business models that we have created initially in Bartronics, the barcoding company, we had to change many times. And this time when I keep hearing, the valuations, I get crazy. Like, every time I get, my BP raises actually and goes down, and I get winter. I get into winter and into, all the seasons I go through everybody. But something that I realized that, there's a lot of learning actually. In fact, when I do right now, the fresh startups that I work across, I sit on my lean canvas models to other places. I also think like you guys, and I'm sure the change has to come. In fact, the survival part, like, the profitability has to bring in on papers actually. They were very clear. In fact, we were very successful. The companies which survived actually had the profitability. So end of the day, I would request all the entrepreneurs to look on the profitability side. This of, whatever the game plan chala of enjoying moments are gone right now. I think the time has come where we all sat down together and understand what is actually going wrong and analyze that actually and start working upon it actually. Go back to your war room, go back to your, start discussing in boardrooms, what can we do better than what we could able to do it actually. So these are things that everybody has to do it. In fact, we keep doing it every time, and we correct ourselves and come back. Maybe the experience matters actually. Probably that is what I like to caution everybody, all of you. Thank you.
Thank you, Bhanu. Rahul,
so
I'll take
a more optimistic view, right? I agree with MSR sir that the bigger businesses, right, or the unicorns were started during these times, uncertain times. Right, and if you're a startup, this is the best time to start up, because you'll be away from the eyes of investors, and you won't be building your business for investors, but you'll be building your business for your customers, right, who are your main key stakeholders, right? So if you're a startup, start building, start thinking about that right now. I met a couple of VCs yesterday, and some bad news, all gloom and doom, 3 venture funds closing, right? Couple of term sheets being taken back. All that is happening, but I think that is because of all the hangama around the bad news coming from the global markets. But it's going to settle down soon, right? I believe that it's going to settle down soon. Some good news, you might have heard about the news about Anderson Horowitz, announcing $4.6 billion crypto fund, another gaming fund. So all these news are coming too, and A16Z has been known to invest in these times, right, where they have taken great bets which have yielded in greater results and returns for them, right? So a good time to start up and good time to build. So keep carrying on that vision, and then we all are here to support you guys.
Thank you, Rahul. Rakesh, if you can please throw some light in terms of what is the situation currently you're raising your next round of funding. So being a profitable company, what is the kind of conversations that you're having with the investors versus your counterparts who are not?
The first question that I get is, why are you profitable? As if it's a crime. That's the first question that I get. So when I make them go through the numbers and explain them why it makes sense to be profitable in the kind of business that we are in, they're surprised as to why others are not. But I think there's too much talk about winter, the whole VC slowdown and all. But what I really feel is that for early stage companies, or at least until Series A, and the kind of scale that we are at, or something lower than that, funding would not be really difficult. And it's insane to actually think and act like something really depressing has happened, because if the last 2 years have been like that, this was anyway going to happen. If not now, at least in 6 months or a year. So the markets are not correcting, the markets are just acting sane, and they'll get insane in another 12 months or 18 months. So if you can survive until then you would not have a real big problem. But in terms of fundraise processes, right, I think what has really changed is this more questions. VCs are suddenly more patient, and the check sizes have reduced a little. I haven't seen valuation go down yet in terms of conversations, but I think that could happen. But also this is a great time for businesses who have great numbers to raise money, because the noise is low and you would stand out in the whole heavy cash burn businesses.
Please throw some light in terms of what are the new questions that you're getting which you didn't get previously from the VCs?
No, the most important questions that are supposed to be asked were not asked earlier. They're asking now, that's it. Otherwise there's no change.
Which are they?
Just what is this, what is that number, why is your gross margin up this month, what is the reason for the spike in revenue, who is this client? It's questions like that.
So unit economics and month on month, year on year.
See, unit economics again is a very overrated discussion, because not every startup can be profitable. I mean, there's so much talk about being profitable, but the kind of business that we are in, we have to be profitable. Now, there's a lot of tech companies, like, you can't compare WeWork and Amazon. Yeah. The problem that happened in the last 5-6 years or a decade is everyone started trying to grow like Amazon. Now, WeWork can't be Amazon, Oyo can't be Amazon, when you have so many assets and costs involved. So unit economics have to be your first thing that you look at when you start the business model. So it can't be the last thing that you look at.
So I asked that question for a reason that most of our startups sitting here are early stage startups. So it's very important aspect for them to consider that from that stage itself, so that going forward they might not. Yeah,
not all business models would have that sense of clarity from day one. So some of them, see, we are a tech-enabled business. I wouldn't call ourselves a technology company for that matter. So we don't demand a valuation like a tech company. We neither think and act and grow like one. So I think the important thing is, what is the business that you're trying to build? What is the business model that you have? And what kind of money does it really need? That is the clarity that early stage startups should have. And what is really sad is that, sometimes people assume that a feature can be a company. Like, the whole Fast or Bolt that happened in US. People are trying to build a checkout feature and calling it a company, and it won't grow as fast as you would want. You probably might get VC money, but when it dries up, you won't grow so fast.
Thank you, Rakesh. Narayan, if you can please throw some light in terms of building business with fundamentals and customer first kind of an approach, so that you always advocated for. So please throw some light on that.
See, So as I said earlier, the first thing is any business to survive, obviously, thank you. So any business which has to survive has to go back on the basics, make sure that they are trying to really address the problem statement in full length and trying to really get onto the nitty-gritties of it. See what is going or what is changing here from the funding perspective. Yes, we are doing a lot of due diligence more. We are spending time. We are trying to understand where it can fail. And that's where we are trying to actually corner out, take out the odds in the game. And Me Too business, Me Too models are not going to anymore sustain. This is going to fade off. But again, having said, early stage startups, I don't see a big challenge, because when you're talking about series seed to series A, I don't see a challenge in the current markets also. When someone is trying to rise a series B or a series C, yeah, the slack or the slowdown would impact them. But for series A from seed level, I don't see a challenge. Seed also should be available. Markets are still good. One of my other VC friend was quoting on the today that they are still raising funds for disbursing. So this is my take on it.
I completely agree with that. And if you can also please mention that, in terms of, larger VCs getting into early stage game. So like, for example, Tiger Global has got into this, Axel has got into this. And do you see that this trend is happening where, larger VCs are getting into early stage?
From a VC perspective, at any point of time, seed is the best bet. And the other thing is obviously anything which is, I would say, at a very early stage. So the ticket size and the kind of this thing which we can bet on is always good from a VC perspective or an angel perspective. So anything which someone asks for a bridge round, I'm happy to do, because that's where we make our money fast. So that's why you look in. So all the big time funds obviously are trying to come back and address this kind of markets.
Agreed, Narayan. Thanks a lot for that insight.
One quick point which I would like to also add. From series A to B, any startup which is trying to rise, you should also explore venture debt and RBF models, which are actually going to be more reliable for you.
So, thank you. Just to clarify about venture debt and RBF, so revenue-based financing is an option where without diluting any equity, you can still raise funds. There are funds who can, invest up to $2 million also without diluting any equity. And RBF is an advanced version of venture debt. Venture debt is like a fixed EMI kind of a model that you end up paying without any dilution. However, in RBF, you have only a percentage of monthly revenue that you end up paying. So that's the difference. So these are alternative funding options against equity, where you don't dilute any equity. Please.
I just wanted to add, so we work with a lot of RBF firms to fund our working capital. So if anyone wants to get an intro, I can do it for them. We work with a bunch of them.
That's great, that's great. So ideally, most of these RBFs have a monthly recurring revenue criteria for the startups.
So you need to have a contract in place, and preferably a B2B contract where they can understand your 12-year projection of the revenue. And even for early stage startups, I think at least a 6 months to 1 year timeline is what they would expect.
Okay. And please.
So in terms of RBF, it is always the MRR and the EBITDA, so which typically matters.
Okay.
So that's where I was talking about the profitability factors.
Yeah.
So going forward in India, RBF is going to evolve big, because venture debt slowly has its own challenges, and there are very limited funds on the venture debt side in Indian markets.
And also, if you have work orders in hand from blue chip companies or anything, you can also encash those kind of invoices as well. There are options like invoice discounting, supply chain finance. Let's say you're into exports, for example, you can also discount those invoices. So there are, what we're trying to tell is that you need not depend only on equity based funding. Basically, there are a hell lot of other options that you can also explore.
But one sad thing is you would end up dealing with the same idiot credit managers, even in RBF model. I mean, they are so stuck in Stone Age. I mean, yeah, the conversations are very brutal with them. So one of them asked, during the pandemic, why did your employee transportation revenue go down? So you get questions like that. Just be prepared.
Thank you. Yes, Banu. If you can please throw some light in terms of what do you say when you mention that, you know, the customer retention or getting the repeat customers or having a customer-centric kind of an approach is very important in any business model?
Yes, see, exactly. In fact, I don't know how many people heard about Salesforce automation when they had in a very peak moment. They were going high actually. They were very having a big party. You know, they're saying that, you know, the sales guys came around the place and said, you know, we have got a lot of customers keep coming across, you know, new customers. And after 3 years, like, you know, somebody analyzed and did it a study there saying that what happened to the old customers? The business actually is going to other guys' competition then. So nobody analyzed it actually. So the repeated customers, for example, any investor, for example, I go back and see, as an investor, if I go back and I go and invest money, even recently we did a couple of investments actually. And we go back and check how many are the renewals are coming from the existing clients actually. That is the major thing actually. So that shows the confidence level that you have built with the client actually. That shows that you have built your systems from the root so strong that, you know, somebody is coming back and giving you another order to you. That is where most of them actually look at it actually. In fact, we do, everybody does in a different way. Like when we go back and cross-check and do that due diligence, you know, the first thing that we do when we taught, you know, is one, that pattern, like how many repetitive customers do you have actually? So where are you going wrong, you know? That is the major concern that I do across. So forget about the recession story, like, you know, I'll take a minute to tell about the story. I don't know how many people know the recession story. So there was actually a guy who was selling, you know, meatballs in the US in some place, and he was doing a good business there. And very nicely he was working on the place, and he worked so hard, you know, and he sent his son to one of the big B school to go back and study and come back and say, hey, my son is studying at the place. So he earned all of hard-earned money, and he was doing the business. So the son came back from B school. He entered inside and said, like, you know, Dad, I think the recession has come right now. You know, you're doing something wrong business. He said, what's that business like? And he said, like, you know, the meat that you're purchasing, you know, somewhere you're not doing pretty well, and you know, you have to change. And then something else. A lot of things he has changed. He said, like, you know, the clients that you're getting, you know, you're actually selling wrong food, you know, you have to change the suppliers. So a lot of things he has changed in Apple. And all of a sudden, and these customers have stopped coming to him actually. And the father realized a recession has come right now. So that's exactly story of recession actually. So don't believe all this stuff of recession and everything. You work hard. In fact, we have shown during our very hardships time. In fact, we went there. In fact, one of the very interesting story I want to share with you, one more. When we did Bartronics business, you know, we're doing barcoding, scanning, you know, all of the other middleware stuff and everything. We're so hyped actually. And getting clients, because we are not a software company at all. So we started building up softwares, wrong modes, you know, wrong steps that we have picked up. And all of us realized, you know, somebody was doing a better business. So what is that business? Is consumable market. So we totally forgot the consumable market actually. And we were shy, you know, most of the time, you know, why should you go back and sell, you know, consumable market? But when we went and realized it, 65% was a consumable market actually for us. And that gave a business to us, 40% business came to us year on year actually. So the change of things that can, what business models has to be, you know, acquired and understood, that is very important to all of us. And the customer retention, as rightly mentioned to you, it's very, very important. And that makes a change of the business plan actually.
That's a very well said, Manu. So having said, focusing on retention on one hand, also keeping equal effort in terms of exploring new avenues or new models which might be better than, you know, the current offering that they actually have.
Yeah, because we close our mindset, like, you know, like, and we said, like, you know, this is exactly what we are. They're stubborn actually. Most of these entrepreneurs, I'm very sorry to tell you, like, and then I go and meet them, like, you know, they're very stubborn on their idea. They say this is the greatest idea that I got in the world. Trust me, I am being there. 1,000 people have got same idea like that. Exactly 1,000. If you can count, I can give the numbers to you also. Same people, but it is the art of execution that we do. Like, for example, why does he, you know, he made a success story. He had an art of execution, the right time, right place, right things. That is most important to all of us.
Absolutely. Thank you, Banu. Rahul, in terms of product market fit, so in our conversations, you were mentioning that there are a lot of companies who have raised Series A funding who still haven't figured that out.
Yeah.
So please throw some light on that.
So I'll divide this into three kind of startups, right, which I've seen typically. So startup A, right, I mean, these are the folks who are doing $100,000 in terms of ARR, right, but working towards product market fit, right. I'm not realized that, but still working towards that. These companies can still raise funding right now. These are in pre-seed and seed stage. So there's enough money in the market. I mean, just to add to Narayana sir's point, right? I mean, there was a fund renamed yesterday itself in Bangalore, right? They renamed it from Inflection Ventures to Athera Fund, and they've launched a new fund for $105 million, right? It got launched yesterday. So there's no dearth of fund. There are enough funds. And all these funds, right, they are looking to invest because they have LPs to report to. So they also can't hold on to the funds, right? So there's enough money in the market which is there, right? And this money will go to these pre-seed, seed kind of companies who are having that 100K of MRR and working towards product market fit, right? Startup B is companies who have $10 million ARR, right? Something like what Rakesh is doing, okay? Closer to that, and they have raised Series A funding already, and they will face difficulty in raising next round of fund, right? But they have enough capital, right, to survive for next 12 to 18 months. After which, if they survive, they're gonna again go and raise next round. The difficulty right now is for the companies who are in that $1 million ARR, right, startup C, right, because these were the startups who were chasing growth. And they got funded on that dream of growth, right? Because all the VCs were earlier saying, right, show me the numbers, show me the growth, right? And suddenly in 3 weeks, right, last 3 weeks when you've seen the downturn, they think growth is fine. Can you show me the profitability, right? So you never build for the investors. So that's first thing, right? If you keep building for the investors and keep doing what they are saying, you're not gonna survive, and you'll be in that catch-22 situations when you'll fail. So you always build for customers and look for things, work. So we have this principle called in Amazon, we have 16 leadership principles, working backwards, right? So we always work backwards from the customers, right? What customer needs, and that's how whole product innovation takes place internally at Amazon, right? So that's how what you should be doing as a startup. If you are in that $1 million ARR situation, just try to survive this period. It's going to be difficult for you because you might have hired on the promise of growth, right? And you have seen all those firing news too, right? So that will start happening. But just hold on for 12-18 months and you should be good.
Thank you, Rahul. And Rakesh, again, in terms of being frugal is one of the aspects that you really believe in. So from your story, can you please throw some light in terms of why should startup be frugal?
I mean, that's the primary way to scale. So I think so when I say we are frugal, it doesn't mean we don't put money into innovation. It means we just are realistic about how the growth should happen. At the same time, for example, we are in a fleet aggregation model, right? You can't have negative numbers at a unit level, which is a basic function of how this business should work. So there's a lot of competition who do negative numbers at a lot of clients to gain market share, but it's not sustainable. So I think frugality has to be the priority one, but there is a large chunk of capital that you should invest into innovating or building new initiatives and all of that. It depends on how much capital you really have. But if you have a cash burn to a point where it is irreversible for you to get to some same numbers, then that's a problem.
Thank you, Rakesh. Narayan, in terms of pre-pandemic, post-pandemic, or going forward also, do you suggest our early stage startups to start looking out for investors without launching in the market and without traction?
Definitely no. So I would always say that please have traction. Understand who is your first customer and get your revenue model right, and then move on, because I think it's high time where seed or pre-seed as such, pre-seed might always slow down, but yeah, thanks to pandemic and the current recession which might come up even for Indian economy, but having said, you should actually have traction and make sure that your customers are at least paying you. You understand what your customer acquisition cost is, and you build up your market right fit product. And yeah, definitely my take is, should not try for that. You should actually bootstrap at the pre-seed.
Thank you, Narayan. Bhanu, if you can please throw some light in terms of you being a serial entrepreneur and taking companies to IPO as well. So what are those key learnings in case if anyways you've started again? So what are those aspects that you're taking forward in your new ventures or upcoming ventures from your IPO journey?
That is, one is stay focused. Is one thing that I have learned actually. During my experience and other things that we keep learning, the experience taught us be focused actually, and start adapting things which is actually the market needs. Most of the things the market demand is what we all need to understand actually. Is there need actually? Like, for example, MSR was talking about the 10 minutes delivery. The whole world is looking at 10 minutes delivery. When all of a sudden I've seen many companies coming back there, like a herd mentality, we all go there actually. There are a lot of opportunities, a lot of things are there. In fact, look at the exports. We talk about recession, but the exports have gone to $400 billion. We're going up. What bad happened to China is happening good to us. I don't see the transport, a lot of things because of Ukraine and Russian war, things went bad. But transport, the entire logistics is doing very well actually. So of course the slowdown is there. There's a graph that we need to understand. That's the flow actually. We need to go back with the flow actually. So, and that's where you keep learning. That's where the economy stands good actually, and that's where the people look at you like how well you work actually. When something is going bad, you need to come up, and that's where you come back and stand. So we as a startup that we do right now, maybe we are trying to do more research actually. In fact, that is where I learned through the earlier process to now process. Like when I go back and stand with a new project, probably I'm not such an expert in certain area that in the edutech company that I started. Everybody, the whole world said like you are a crazy guy, you're a mad guy, you're spending money there on edutech company. There are mushrooms of companies are there. So we found that there is some business opportunity. Why so many companies are there? So what research said to us, maybe the domain specific courses where the industry ready, which I heard were being taught, were not being taught actually. We said, why can't we do that? In the 2-tier cities, other places to you. So from other side, river side, we started building up, and touchwood, we started getting in the profit mode actually. So that is where we learn, stay focused on what we're trying to do, understood the market analysis, and more importantly, the research. Many of them actually forget the research actually. That is where it is the lost one actually. That is where we learn, and I learned actually.
Thank you, Bhanu. That's a very important aspect. Most of the startups miss out. So we also did that same mistake. So we got an idea, we started building the product, then started looking out for customers. So there was no market research in the process. So in case out of 5 startups, only 1 took off really well. So in case if we did that market research, we shouldn't have even worked on the other couple of them maybe. So that should have saved a lot of time and effort and resources as well. So this is a very important aspect early stage startups need to understand. While you have an amazing idea, brilliant idea, you own it and it's your baby and all that, but having said and done, you need a customer to pay for that, right? So if market research says that that is not something that is working out, then it's time for you to pivot. So let's all accept that and work accordingly. Yeah, thank you, Bhanu.
In a later vein, it's like arranged marriage actually.
You'll have to live with it.
They'll go back, the parents used to come back and tell me like, don't get love marriage, man. Then they ask me why, we go back and check their, 7th Tarat or 8th Tarat, we'll go back and check, with his forefather, what was the problem, this was the problem actually. Suddenly they realized, the girl got married and she was mentally upset, there's a psychology problem with his grandfather. And somebody had, so maybe we should adopt those changes in a later way, and I'm going to tell you, but that's very important.
Yeah, one thing for sure, as Bhanu and Prithvi, you told, see, validation of idea is very important. So until unless you validate your idea, don't jump on it. And until unless that due diligence part, of course, as investors we look in is this idea really validated? Is there a real customer segment which will actually take? And even from the idea perspective, I always look at it in twofold. Is it a need or is it good to have? So if it's a need, obviously, yeah, no doubt, you will be successful. Yeah, probably one of the best classic examples is Redbus, funny story. And if it is good to have, yeah, you need a deep pocket, and of course you need to plan slowly for your rising funds or building your business so that it can be bootstrapped or your customers start paying for it. So either way, you have to make sure that your idea is first validated and then got into the market. Don't jump with the ideas which you think are right. Please validate them.
Thank you, Narayan. So if we can summarize in terms of whether it is starting with idea itself, validating the idea with right kind of market research, so then ending up with the right kind of ideas, and preferably having a first mover advantage, and also go on to become leaders in that segment, and then also keeping unit economics in mind and working towards profitability, and thus building sustainable business models might be the right kind of approach way forward for startups. Please feel free to add on.
Yeah, it's the same thing. Like for example, when Urban Kisan, when we started actually, the concepts we have changed actually. So we wanted to bring in stores, then we said, okay, this is going to work across. So we bought in Mandi, the model of getting farmer as a king. We bought them actually. So we onboarded almost 1,000 farmers, the real-time guys. Like we went and trained them, did a lot of homework actually. So this actually needed a lot of research work, and we took a lot of help from a lot of peer groups and understood the market reality, what exactly the farmer is facing actually. So that is very important. So you go back and sit with farmer, and you will understand what farmer actually is facing problem. How can you sit down here in a ratio room and understand like the farmer, okay, I'm going to buy from him, I'm going to sell from him, who's actually ordering there. That is not the way actually the business actually happens. What does that farmer do actually? How does he make it across? You need to go back and understand, get into their shoes, and understand the whole ecosystem that he has built up actually. Then probably you'll get more ideas. You'll add more points there actually. Like logistics, like I was talking about, you like if you really understands well, then that is where the real problem is there. Go back with them. Go travel along with them and understand what is actually the real problem. Then you will know what is the real problem, ground problem there. So once you know the ground problem, probably yes, you have done with the problem. Half of 50% battle you have succeeded actually. Yeah. The rest 50 is your your luck and other things will come into picture.
Yeah, one more thing, right? I mean, from what Bhanu said, be ready to pivot, right? What Rakesh did, because a lot of people love their product. They love them so much that they go behind that for 3 years, 4 years, without product market fit, believing in that idea. So don't do that. I mean, get validation from investors, from mentors like Bhanu, right? And be ready to pivot, like how Rakesh also did at the right time. So be open-minded about what you're working on. So that helps, in evolving the business.
Thank you. Would you like to add anything there?
I would slightly disagree with the market research part, because anyone below 30, the current gen, I think we would get into an analysis paralysis kind of situation. I think we would overthink to a point where we wouldn't do anything. So when the lockdown was going on, and I pitched the logistics thing to my team, they took a couple of hours of discussion, the leadership team, and they finally came to a conclusion that it would dilute the brand. So I woke up from my morning sleep and I told Prashant, my CEO, that if we don't do this, we'll dilute the company, not the brand. So I think too much analysis, too much discussion would also, kill your gut and your instincts to solve a certain problem. So I think if you find a problem to be really, really as a pain point, then you should just go with it. Especially in B2C, I think you should not try to validate too much, because no matter how much sample size you take, you'll always get different opinions. But for B2B, I think you should really try and validate. For BTC, I wouldn't suggest. You have to go with your gut feeling.
So you're saying that PhD guys don't work very well actually?
I'm not saying that.
Let it
Open the floor for the questions.
No, in fact, Elon Musk said that some time back about PhD.
Yeah, I have one question for companies which are SaaS based or software based SaaS platform. How important is traction for them to go for a seed fund? Because ultimately, for developing the complete platform, it took a lot of time and effort and money into it, to ready to be sold in the market or to launch. MVP is fine. So yeah, that's my question.
Can I take this question? Yeah. So one thing for sure, seed fund, as you said, is always taken from the friends and family. They are the first people who would actually love to get fooled.
and trust you.
I would say get fooled, okay? Because they don't understand what value proposition you're coming up with. But yeah, they are the people on the face of you would love to give you some money. So never, the first thing which you should always do for building your traction is raise funds from friends and family. I hope it helps.
I'll categorize that a bit differently. So I mean, what Narayana said, friends and family, I'll treat it as an angel round, because now seed and pre-seed has kind of, completely entered into the VC arena, and these are called micro VC funds, right? I speak to close to 110 micro VC funds. Micro VC fund definition is that they are less than $30 million, right? In that range, right? And they are looking to invest in pre-seed and seed rounds only. Now coming to your question, right? See that they're both the approaches are right. You can either take Zoho and what BrowserStack did, right? No funding, bootstrapped. And yes, but there's another story, right? Freshworks. Other side, they did well too, right? The stock is not doing great because of the technology bloodbath in the global markets, but they did well too in terms of revenue and growth, right? And they did complete reverse approach. So both approaches are right. There's nothing, but it depends on your team and the strategy and the direction which you want to take, right? So if you have enough runway, you can go ahead with bootstrapped, but with any kind of seed fund or any funding, that growth gets accelerated, right? So what you can do in maybe 10 months, you might be able to do it in 3 months with funding. And so of course mentors come, right, like Narayana with funding, so you get support from them too. And they open up a lot of channels, by the way, right? In terms of market access and everything, it opens up a lot of channels.
So other thing which I would like to add is, yeah, you should actually get onto one of those accelerators. Probably T-Hub has a lot of programs which support, so you should explore them. And yeah, always don't think about rising. Look at doing the other way around.
Yeah, that's just a question because initially, like 6 months back, we did try to raise fund. We did try to connect with few VCs, but we didn't. We had a conversation with few, but we didn't heard back, anything positive. But so that we pivoted little. So rather than directly going to the consumer, we pivot little bit and we started building solutions for the B2B. And initially, like AWS, we use AWS for our platform.
Can we take the conversation forward offline? Thank you. Any other questions, please? Any other questions?
I love them here.
Yeah. So they understood everything. That's great.
Hi, my name is Abhinav. So I have a question. So some of you guys discussed about PMF and validations, right? So there are many companies, at least from what we know, they might not have done the research, even the 10-minute deliveries, the needs and the have-tos, right? So is it a good time for a startup? Because like you also suggested that people under 30 are having a high risk appetite as well, right? So they need not have to do the entire research part of it. As long as we are quick on our feet and we are ready to pivot or adapt to the current market situations, is the product market fit and validation necessary a checkpoint that is mandatory, or can we go on to the market and learn the lessons from our mistakes, and if we are quick to adapt, will that model also work?
Definitely failing fast is a good thing to happen for any startup, no doubt. But at the same time, how many times you fail, doesn't matter, but you got to get the right product fit or a market fit solution. But having said, without a proper validation, there's always proper is a relative term, but without a proper validation, it always sucks. So you got to understand what is your customer need and what you are trying to address. So let's take the 10-minute delivery itself. What MSR told itself is a need. Though it is a fancy thing, I need it in 10 minutes in my bedroom. It doesn't make any difference because I need it, right? So some examples are important, but having said, you should validate. So as he was mentioning, a lot of businesses have evolved. Because of the 10-minute delivery, he is actually getting one more customer. And there is a use case to it. So my point is, please do some research, understand your pain points. Customer problem statement is something which you should always understand in detail.
Just to add to it, right? I mean,
follow up.
Just to add to it, I mean, see, product market fit is something which comes from the customers, right? I mean, if you're not doing product market fit, you will neither generate revenue, you will not raise funding also. So it's like you'll be in that status quo where you'll be thinking either should I close this up, and you will that will lead to frustration, right? And that's where the startup dies.
So you would have a different reaction when you're asking them versus when you're asking them to buy. So it's important to have someone who is willing to pay.
Any other questions?
So hi, I'm Arpita from Deeploop Technologies. So I just want to know that as you said, investors are going down currently. So how the startups are, paying high salaries to the resources, and all. So how they are balancing, they're not getting enough.
That is also going to go down. It's a good thing.
Yeah. No, I'm asking how they are balancing. So is this a good trend, to how to balance those two things, investment and the paying salaries and all?
It's actually the honeymoon period, they call it actually. So that's an honeymoon effort. Any science can tell about that actually. So there are good times lot of, the aggressive way they actually raised fund and aggressive way they have spent money actually. So both sides went wrong. So the cash flows, all these things there's no clarity actually. In fact, one side, the VCs, and all these private equity guys said, go ahead, get business. And suddenly they're asking, get profit right now. There's a confusion. There's not a confusion, but it is actually the truth actually. And of course, the salaries were paid high, the hype was created, and that will come down. In fact, it's like rightly we mentioned, it's a graph actually, it comes down actually. In fact, all of a sudden we saw the recession, the software guys went, when we were working in our company, he was getting, 6 lakhs rupees salary, suddenly came back with, with offer letters, 25 lakhs, 30 lakhs. When a guy who's been interviewed him in 2 years, how can he get 25 lakhs, 30 lakhs? And people are paying actually. And today another trend has come, work from home. I don't know how many people see that. And people are working from home actually. In fact, when we call them back, they're actually coming with a resignation letter to us. And they said, okay, why? Because he has got 2 more offers. So we realized, we went and did a study, that guy actually is working for 2 companies, not 1 company. So he's making money actually, sitting at home because he's gone to his hometown, mother-in-law, father is there, working there, they're taking care of him, दामाद अच्छा रूम में बैठ कर काम कर रहा, महीने को 5 लाख आपके घर में दे दे रहा, they are all happy about that, 2 lakhs, whatever the money is happening. So all this is like a honeymoon period till over actually. So it will come down, and in fact the ground reality is you need to go back and cross check, what is that, everybody, even the venture capitalists, the VCs, all those people also, they also, because of the recession in the market, the global market is down actually. So it will all slowly come down, and as I rightly mentioned, Rahul mentioned, probably another 2 quarters again will be up actually. So all that you need to do is how to survive, is what you need to learn actually. That's an art. Airbnb, when we went there to Y Combinator, in fact we had an opportunity to talk to them actually. They said you need to be a survivor. How do you survive is what is the major thing actually. When they went in 2008 for raising fund actually, they said the market is down, why did you come again? They went back again in 2009, again it was down actually. So these guys who are sitting there, I don't know how many people know this story, they went and gave a small packet of food actually, said we are going out actually, we not got selected, and this is what we're giving a packet. The packet was actually Barack Obama and who was the other competitor? Barack Obama and the elections, they were giving, making them, snack bars and selling them, for the, making some money actually. So they realized, Airbnb and there's a box, why are you doing it? They said, since we have to survive, we started making these boxes and selling it actually. So that's where, the guys realized, they got their first check cut, some $20 million was paid actually. So they realized, how the survival part is across. So I'm not telling you to go back and sell those things to you. Most people don't agree, but what you need to understand is how do you survive. That is where the important part. Now entrepreneurs should look at it actually, because many people have actually come to you believing you that the employees have come and started working for you. So it's your responsibility, like a father of a family. Like, will you leave your child out like this? When I'm like an owner of a company, I act like a father actually. I take the responsibility. What will happen? Can I leave my wife and my kids outside there? I'll not do that actually. So I like to listen. What is going to happen actually? It's like a family that you do untie and unity. Like you can't untie them actually. So that's where you will keep learning things.
Thank you, Vanu. Rahul, would you like to throw some light in terms of the kind of initiatives that you're doing under Head Start, or how can startups get benefited in terms of market access, or even especially from the scalability of architecture standpoint? So what kind of support can they expect from your side as well on that front?
Got it. So at AWS, startups team, we have a lot of programs, right? As he was saying that he has used AWS credits, which comes as part of AWS Activate program, which is the most famous program because that gives you credits to build and scale. And as you raise funding, right? You keep getting more credits. The validity is up to $100,000, which you get during your lifetime. So that's the most famous program, AWS Activate. But yeah, we have more programs too, and we jointly work with a lot of VCs, right? As we speak, in Bangalore, we are doing one with Nexus Ventures, right? So it's a AWS Nexus, Innovation Week, right, which we are hosting. Where what we have done is we have got all the dev tool companies. So there are 50 startups who are working on developer tools, and we are connecting them with 20 enterprises who are looking to adopt developer tools, right? So we keep sharing such programs with T-Hub, right? And we'll try to do more of such programs in Hyderabad too. We did something called AWS. We're doing something called AWS ML Elevate with Axel, right, where Axel has come in, and they'll be, so it will, see why Axel partners with us is because they bring a lot of GTM funding, investor perspective. We bring in a lot of technology, global perspective on how we can help startups, and we together add that value. And it acts as a good deal flow for Axel also, because they connect with a lot of startups which they're looking to invest in. So a lot of such programs. Apart from that, we have 6 corporate venture funds from Amazon, Climate Pledge Fund, which is a $2 billion fund, Climate Now Fund, $300 million. We launched 2 this year, right? One was the Amazon Industrial Innovation Fund for anybody in manufacturing, right? It's a $1 billion fund. We launched a URF, which is an underrepresented fund for women entrepreneurs, which is a $30 million fund, right? So we keep doing this. 2 funds which are already existing, which is Alexa fund for voice startups, again a big fund, and Sambhav fund, right? We just concluded Amazon Sambhav. So, we selected top 30 startups over there, right? It's for SMBs who are digitization, who are moving towards the digitization path, right? So a lot of such programs, and we'll keep sharing that. I think, you can reach out to us directly or through T-Hub. You'll keep knowing about these programs, and, happy to support all the startups through these.
Thank you, Rahul. Any closing remarks from any of us? We're good to go. Any other questions? That would be the last question. We can take the questions offline.
The last line also is standing.
I'm Sukhdev. I just wanted to ask, where and how do I start if I want to be a venture partner?
Connect offline.
You can meet me.
You can meet us as well. We can also guide you on that front, where to start. Yeah. Thanks a lot, everyone. We'll move on to the next session on the agenda. Thank you all, panel.
Thank you so much. Yes.
Request you to take your seats, please.